been a lot of anticipatory moves in terms of buying Bitcoin ahead of this. And you'll often get in our business, they'll call the trade a sell on the news. So that you'll get hedge funds and other investors buying into an event that they think will happen. And when it happens, it's just a sell signal for them. Just then on to the next thing for them. So we might see a little bit of that, but enough people are talking about that now that maybe it won't be as big a deal as it might have been otherwise.
Cathie Wood has been a prominent figure in the public fund management space, discussing Bitcoin since around 2015. In a recent interview, she has asked about the potential impact of a spot Bitcoin ETF on institutional adoption in 2024. She emphasizes that while a spot Bitcoin ETF is not a replacement for self-custody, it is crucial for institutional exposure to Bitcoin. Without the green light from the SEC, institutions would likely hesitate to consider Bitcoin seriously. An ETF provides an accessible on-ramp for these institutions, packaged in a format they understand and trust. Wood also highlights that, based on Ark Invest's research, institutional involvement in a new asset class is the most significant driver of price appreciation. She believes that institutions are beginning to recognize Bitcoin as a new asset class, which is important because new asset classes typically offer a low correlation of returns and increased returns per unit of risk. This recognition is crucial as institutions compete against each other and cannot afford to ignore a burgeoning asset class like Bitcoin. Alden discusses the rise of various Bitcoin movements around the world, highlighting how these grassroots movements are creating a cascade effect, inspiring more communities to adopt Bitcoin. She points out the unstoppable nature of this bottom-up adoption, which is difficult to replicate and incredibly powerful, especially in regions that need it the most. Let us now get into the video as we listen to Cathie Wood and Alden share their insights. Don't forget to hit the like button, subscribe, and drop your comments below.
I would like to clarify something that, we're seeing on X. Many people think that we think this is a replacement for self-custody. Absolutely not. We are as focused on the importance of decentralization as anyone is out there. But in terms of giving institutions exposure, unless they got the green light from the SEC for the most part, that was critical. They probably wouldn't even think about Bitcoin. And without an ETF, what we would see in institutions would be major gridlock. You'd have all these departments and institutions, procurement for a new service provider, finance, compliance, and legal. You'd have so many touch points that it would be a long time, I think, before institutions would get involved. This gives them an on-ramp that they understand well. It's in an ETF wrapper, which has been a good wrapper for end clients in our business, and it is now becoming the preferred wrapper. So and Yassine can talk about this in much more detail, but based on our research led by Yassine, the institutional, in terms of the price appreciation we expect during the next 7 years through 2030, institutional involvement in a new asset class is the number one, the biggest increment to the price, we believe. And one of the reasons it is becoming more top of mind for institutions is they are buying into this notion that Bitcoin is ringing the bell for a new asset class. We did a paper with Coinbase with that title in 2016. It's truly a new asset class, and institutions cannot dismiss a new asset class. Why? A new asset class typically means low correlation of returns. And it typically means, therefore, increased returns per unit of risk. And so these institutions cannot ignore it. They're competing against one another. And that is why I think it's going to be a very big deal for this new asset class. of course, for a time there, the leadership at BlackRock was not so favorably disposed to Bitcoin. So that was very big, just that. And I think that happened, Yassine, was that 9 months ago, something like that? Might have been longer, more than a year ago, perhaps. So that got the brain cells going in the institutional world. And another thing did as well, and it was before BlackRock, Cambridge Associates, which is a consultant primarily to institutions, I think endowments, foundations, and pension funds, in 2018 wrote a paper and said, okay, asset allocators, you may not be predisposed to liking this thing called Bitcoin. But you better study it and develop a stronger point of view, because it does appear to be a new asset class. So since 2000, that's 5 years now, we've had that kind of thought roaming around, and the excuse was, oh, the SEC hasn't blessed it. Now they'll have no excuse. And if you just talk about 1% of trillions and trillions of dollars, or 1% allocation, well, the scarcity value of Bitcoin will shine through next year if institutions do indeed decide they must gain access to this new asset class.
Lynn Alden emphasizes the rise of small Bitcoin communities around the world. She notes the significance of grassroots adoption in places like Bitcoin Beach, Bitcoin Jungle in Costa Rica, Bitcoin Easy in South Africa, and Bitcoin Lake in Guatemala. Alden points out that while the focus is often on large-scale developments like ETFs or nation-state adoption, the real transformative power of Bitcoin lies in its ability to empower small communities and individuals, especially in regions with multiple currencies, capital controls, and conversion frictions. Let us now get back to the video as Lynn Alden talks about what she looks forward to for Bitcoin as an asset class. To Lynn Alden, ETFs are cool, but Bitcoin communities are way cooler.
People are focused on things like ETFs or nation state adoption. I like small community adoption. And so Bitcoin Beach was an early one, and that inspired a nation. And that was kind of a special case. But now you see, for example, there's Bitcoin Jungle in Costa Rica. There's Bitcoin Ikasi in South Africa. There's Bitcoin Lake in Guatemala. There's the Indonesia Bitcoin Conference hosted by a woman named Dia. There's now for 2 years running. And then there's the Africa Bitcoin Conference in Ghana hosted by a woman named Farida. And so when you see in the developed world these kind of questions like, what is Bitcoin's use case, or it's a solution in search of a problem, it's like, well, broaden your scope and look around the world. If you look at Africa, for example, there's over 40 currencies, and they all have like these capital controls wrapped around them. They all have conversion frictions between them. They have fake exchange rates between them. If I send dollars to someone for doing graphic design work for me in Nigeria, unless they have a dollar bank account, they're probably not going to receive it in dollars. If they do, it's going to be at a fake exchange rate. It's like there's all these conversions that happen that are all frictions. They're all permissioned. They're all basically siphoning off the top. And the cool thing about Bitcoin is that you just go around borders. So if I was working with a graphic designer anywhere in the world and they hold up a QR code or have a Nostr address, I can just pay them on the internet. It goes around their little locked up local capital market, their local banking system, and it can get to them. And so, historically, we have 160 currencies in the world. There's two main ways that capital goes in and out. One is ports of entry, which are obviously very physically controlled. And the other one is wire transfers. And those banks are highly controlled. And they almost have like a blood-brain barrier between, like, if you send dollars, it just gets converted if they want it to into the local currency. It's very controlled. And so what Bitcoin does, and to some extent stablecoins do, is they just break that open. They just say, okay, you just route around all of that. You can bring infinite value density through an airport. You can send infinite value density in near infinite speed over the internet, and just go around that and empower the people in those places. And so those little hubs that are building up organically, and as some build up, another one sees them build, and they say, well, why doesn't our country have that? So they build the next round, and that's why there's over the past 3, 4, 5 years there's been this kind of cascade of more and more of these little Bitcoin hubs. Even in the United States, Bitcoin Commons, Bitcoin Park, these are U.S. hubs, and so both in the U.S. Now there's Real Bedford in UK, right? That's like another little Bitcoin hub. So they're either centered around a city. In New York, there's PubKey, right? So you have these little kind of persistent meetups, or these real estate, or these kind of networks that are building these hubs. And then I especially love the ones that are foreign, because if anything, that's the environment that needs it even more. And so I think that's one of the most unstoppable aspects of it, and that's also one of the most inspiring.
Bitcoin has turned positive again during a roller coaster start to the year, recouping a portion of losses from a flash crash Wednesday, with investors shaking off concern that U.S. regulators won't authorize exchange-traded funds to directly hold the digital asset. The largest cryptocurrency tumbled as much as 9.2% 2 days ago, or the most on an intraday basis since November 2022, after Matrixport analyst Marcus Thielen wrote in a note that he expects the Securities and Exchange Commission to reject all Bitcoin ETF proposals this month. Bloomberg intelligence analysts estimate that there is about a 90% probability the SEC will approve the ETFs by January 10th. U.S. spot Bitcoin exchange-traded funds, ETFs, appear to be on the verge of launching after the exchanges that will list them filed amended documents, suggesting they expect U.S. Securities and Exchange Commission approval in the coming days. The amended 19B4 filings, filed on behalf of BlackRock, Grayscale, Fidelity, and others, join last month's amended S1 filings, addressing feedback from the U.S. Securities and Exchange Commission, SEC. More than a dozen applicants hope to launch the first spot Bitcoin ETFs in the U.S. It's likely multiple issuers will be approved simultaneously. Individuals at 2 different issuers told CoinDesk on Thursday that their companies anticipate approvals sometime next week. One of the individuals told CoinDesk that filing the amendments did not mean approvals were guaranteed, but said they were optimistic. A final deadline for SEC action for at least one application by Ark 21 shares is January 10th, suggesting the regulator may approve all of the final applications it is comfortable with by that date. This filing is another important step towards uplisting GBTC as a spot Bitcoin ETF, Grayscale spokeswoman Jen Rosenthal said in a statement, referring to the company's Bitcoin trust that it wants to turn into an ETF. At Grayscale, we continue to work collaboratively with the SEC, and we remain ready to operate GBTC as an ETF upon receipt of regulatory approvals. Earlier Friday, Bloomberg reported that the SEC's commissioners were expected to vote on the exchange rule filings next week. The regulatory agency needs to approve both the 19B4 filings and the S1 filings before the ETFs can launch. As we now greatly approach the ETF approval deadline, what are your takes on the possible scenarios that may play out? Let's hear them in the comment section below. Also, don't forget to hit that like button, subscribe, and turn on notifications.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform. Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.